So I think, yeah, all I can see excited faces towards the, important award ceremony. But I think prior to that, we would like to, really have some amazing insights from, Ram sir and Shafiq sir. So I believe most of us over here are, very well heard of Mr. Ram sir, Ram Rastogi. Ram sir, of course, he had an amazing career with State Bank of India, and then of course, he was instrumental in building a lot of products for NPCI, UPI, which is one of the India's super story. That's what I think probably we talked about whenever we meet. And of course, he's also a chairman of Government's Council for FACE, which is also helping a lot of fintechs and banks and other organizations to shape up the various initiatives. And very interesting, it was great to interact with Shafiq the other day. Shafiq, of course, being an entrepreneur and also founder of FXB Payment. He's been working with certain large organizations based out of Middle East, where he's actually been part of the digital transformation stories, and of course being CDIO for one of the large organization. We also had Mr. Prasanna Lohar, but unfortunately couldn't join. He shared his apologies from his side, but of course Prasanna Lohar again, CEO of Blockstack. So I think what we'll do probably is that we've heard a lot about this banking as a service, and I think most of you over here, some of you are working with banks, some of you are working as fintechs. Probably banking as a service, we have seen that story really mushrooming well. There were certain parameters, or factors around products like UPI or BBPS, and also, post COVID-19 and several other phenomena that has drastically changed this particular topic. And more importantly, government is also looking very seriously towards this. They are coming with data protection bills. So in the middle of so many things, we just look forward to the respected panelist, where we can see how this can be redefined. And of course, prior to that particular topic of redefining banking as a service, we'd like to understand how exactly this India BaaS story has been built. Probably Ram sir can guide on that, and maybe from Shafiq sir we can hear about how globally the phenomena has evolved. So I would request Ram sir to just throw some lights on the existing BaaS story, and then we can move to the how it can be digitally transformed, or how we can play other organizations can play roles towards it.
So the topic is very apt. How the banks are going to face the challenger banks, which is neo banks, talking about be it platform as a service, or distribution as a service, or eventually, who is going to control the customer? It is a technology service provider who is really controlling the brain, the consumption habit of the customer, or a bank who will become a maintenance manager in future if they do not evolve. So it takes about a day kind of workshop, but then 30 minutes, I don't think we'll be able to do any justice to that, but I'll give you a very high level kind of thing. Everybody talked about India's story. So there's an World Bank study which was validated by Indian Institute of Applied Economics that inclusive society where the financial inclusion is there, it increases the GDP of the country by 1%. Jaideep sir will be really confirming the thing. Going by that logic, if we are top 5th economy, I want to become top 2. It is necessary for us to do a creative, totally financially inclusive society. But as per the RBI Financial Index, Inclusion Index, we are only 56.4%. As of now, 70% population resides in villages, 640,000 villages, out of which only 5% villages have got the banking branches. With this scenario, the banking could not provide them, the banks could not provide them the basic banking services, what to talk about insurance, lending, and other products. In that eventuality, the fintech, the people who were energetic, they had technology, they have cognitive technology, quantum computing, they came and supported them with the help of banking correspondent, which is corporate Bfsi, Or you talked about platform as a service or distribution as a channel. You see the various companies like Spice Money or FinPay and others, they have gone with 3.4 million digital correspondents, not the business correspondent, and they have reached out to each and every villages of this country. And that's why during COVID time, nobody felt the need of banking, because they were the people, they were servicing them, providing them the cash out services to their doorstep. Having come so, these guys are not yet regulated. The reasons that RBI is not able to regulate them, one thing, for regulating them, RBI has to amend the Banking Regulation Act, which is BRA 1934. Number two, government in India doesn't have a very comprehensive Data Security Act. Now, unless until the act is there, they cannot depend on the non-regulated entity to provide them the details of the customers, which can be misused probably, and couple of fintech have misuse also. And that's why you see always every second day or 15 days, these services have been withdrawn, that services have been withdrawn. But last Thursday, Government of India, the Minister, Mr. Vaishnav has come out that they are planning to regulate the fintech lenders as well as the others. So having said so, they're going to be a lot of churning out probably when we have the CBDC, retail CBDCs coming out. The banks have to really rethink that how they are going to compete with them. There are three models. Either you compete with fintech. I don't think the banks have the wherewithal and technology capability to do that. The same thing, coordinate with them. Yes, some banks have coordinated with them. There's a ICICI Bank. The entire lending, they have given it to the fintech. The third thing is that become a fintech. So SBI tried to become a fintech by creating a platform known as YONO. But nevertheless, they're not able to compete with these new people who are coming in the market. And they are going to really drive the entire payment system in coming years, which is going to be a $10 trillion kind of platform in 2026. So with this, I always believe that the fintech need to be regulated, they need to be guided so that whatever the investment they have made, it goes in a positive way. Thank you.
No, amazing. I think what we could gather is some very, very valid data from India's story perspective. But we always are constrained by our own thoughts sometimes, and there've been a lot of innovations earlier we used to follow, but now the globally, countries are following India's stack. So maybe we can hear from the horse's mouth what exactly the globe is talking about, India.
All right, thank you. Thanks for the invite, and it's always a pleasure being here. Well, before I get into this discussion, how many bankers in the room? Bankers. Fintechs, startups? There's a good number of people, right? How many married, unmarried, married people? Now, the reason I'm asking you this is because I have to justify my travel today to India. So I don't know how many of you had to go through the same process. But anyhow, it's always a pleasure. And I don't know why we have 14th every year. I need to ask Bharti about this. So coming back to the topic of the path that you mentioned, and I echo, it's not only limited to India, but it's globally the same fundamentals, right? The question is like, first of all, what do you mean by banking as a service? And who is it for? Is it for the banks to transform the way they're doing it? Or is it to support the fintech? And that's a thing that a bank needs to understand. Two of the regulators in the region, in Middle East, like I was talking to two of the regulators in different forums, their objective was very simple. They said, we want to keep it very regulated. We want to support the fintechs, but we want to support fintechs through a regulated bank. Because they want to make sure that they don't want to go through every fintech compliance, but they said, we have really regulated the banks, let them come through them. Now, it's for the banks to understand, and what you rightly mentioned, they can't get into that space, being totally digital, right? So they have to collaborate if they really want to survive, sustain, and add a real value. So that's where it is. Now, banking as a service is more for the banks, I would say, rather than for the fintechs. Now, it depends on how the banks perceive this one. Now, fintechs could be a digital sales arm for the bank. Really? Is it better? Okay, I thought I was echoing myself. Okay. All right, so it all depends, right? Now, the banks will consider this as a digital sales arm for the banks, right? That's very important to understand, because banking as a service, it's not changing anything, right? And it's very difficult from a tech side also for a bank to really adopt to the technologies that they have since decades. So the best thing is just go have the banking as a service, create digital sales arm through the fintechs, and that's what it is, right? And that's the way forward. That's I feel, and this is something that we have been doing in other parts of the world, especially in the Middle East, because over there, we have only in Dubai we got like 200 plus fintechs registered, but very few of them are active. It's just because they don't have a bank to kind of support them, right? I don't know how things are back in India, but that's how it is, right? There are regulations in place, but to really comply with those regulations is another hassle, right? The capital requirement, the compliance, and those fintechs and startups are not able to manage that. There is a vague regulations also. Sometimes, one of the major global player from UK in the cross-border payment registered themselves in ADGM in Abu Dhabi. They are successful globally. They're doing great business. They registered themselves in ADGM. They were penalized by half a million, sorry, and then they had to shut down the business. Just because the way they operated in UK was different from the way it was in UAE, all right? And then people just think, okay, fine, it works over here, it works over there. That doesn't happen, right? So banking as a service is not a technology only. It is something to do a lot more. It's more of a compliance thing that the banks can really do. Now, again, there's a conversation that happened with, again, the central banks to understand, you have a lot of initiatives saying that we support digital transformation, but somehow you don't support the fintechs. Now, we talk about financial inclusion, and that mainly for the people under bank, but what about inclusion of those fintechs and startups? What happened about those things, right? Central bank says, guys, we have a bigger responsibility. We have to make sure the people of the country and the funds of those investors are secured, right? And how do we do that? Well, that's one thing. So what they do is they take the route of the banks. Now, I know there are a few banks in India who are very open. They work very closely with startups and fintechs, and they're doing pretty well. Of course, it's a big challenge that they take. Similarly, we have a couple of banks in UAE, for example. Two of the banks in UAE, they have launched their own fintech arm. They call it Emirates Bank, they launched Liv, Nashik Bank, they launched Neo, which is a fintech digital bank, right? Fab, for that matter, they have another entity called Magnati. That's a digital arm of the bank which is supporting fintechs. So there's a lot of happening in that space, and of course, this forum is 30 minutes is a pretty short time to discuss more about it, but yeah.
No, I think absolutely we need a definitely the collaboration between the industries, the banks, regulators, of course. And we've seen from examples globally that that also can be a particular way to manage the things. However, very quickly we'll talk the wonder about the wonder what Ram sir had been instrumental creating that UPI. A lot has been said about it. A lot has been discussed about it. But still, it's like a poster boy. And at least as a banker, I always feel that UPI is democratizing the retail set of banking. So when we redefine this banking as a service paradigm, do we see any B2B products on the UPI stack? Maybe we can hear from you, Ram sir, because again, you've been part of so many advisory boards and industries. We can hear something on the B2B side, right? We spoke about it. We've met some gentlemen outside.
So you'll be surprised to know certain facts which I am going to tell you today, and believe me, they're correct facts. 248 million people are unique users of digital payments in India out of population of 1.4 billion. Now this 2.48, these people, 248 million people are doing 8 billion transactions in a month. Are the transactions are real, are induced, are 1 rupee transaction? 52% transactions are less than 200 rupee, and 15 or 16% transactions are 1 rupee transaction, which we call it penny drop transaction. So our guys are misusing this wonderful product which we have created as a public good. Nothing is happening, only 1 rupee, 2 rupee transaction. They want to verify the account is correct or not. They do one rupee UPI transaction because it's a free. So banks are bleeding. Banks are bleeding to the extent their core banking solution, which was not meant to receive this 8 billion transactions, they are losing a one high value transaction, they're getting timed out. Having said so, last 2 months, the transactions are plateaued. The growth in January is only 1%. If you're talking about a billion a day from 8 billion in a month, you have to think differently. The difference is B2B transactions. Because today, if you see the entire landscape, 10% is P2P transactions, 32% is a merchant payment, 30% is a B2B transaction, which is still happening on your check and other thing. Most probably, mostly people are using NSCH. Now, I am saying that UPI is meant for real-time payment system where these are really needed. A 5 rupee transaction transferring by my account to your account, if you're reaching after 1 hour, how does it matter to you? Why you are exploiting this UPI system for this? My only submission is that once this services are priced, then people will think 5 times before realizing that entire thing. The second thing is that banks, 49 crore Jandan accounts were opened, 29% accounts are dormant, not a single transaction there. While opening account, banks have paid 180 rupees per account, and they are paying 100 rupees per year to their CVS vendors for maintaining that account. So once you are talking about all this, you have to see both the side, how the banks are bleeding. Is it a correct thing that banks, if any UPI transaction, if you are having a State Bank of India account, you are not paying, but your state bank is paying 30 paisa to Google Pay, 10 paisa to NPCI, and 1 rupee to the beneficiary where the money is going. How long you can sustain that? So what I am trying to say that if you're really interested that ecosystem has to be built up in a proper way, in a healthy way, you have to see that both the side, remitter as well as beneficiary, everybody is at least taking the money, taking the expenses we are incurring. So B2B, yes, it is going to happen. It is going to happen much more. In fact, after this CBDC retail, which a POC is happening, once it is done, all small value transactions will be transferred to the wallet, whether it's a wallet issued by the bank or PPI. Last week, RBI has issued a compendium on the PPI, and they are going to play a very vital role. So perhaps my request to all the fintech that they should take a license of PPI and become a bank. Unless until they do this leg, they cannot do justice to the entire system.
This is amazing. In fact, we look forward to a lot of large consulting firms, but the forums like this are like, very easy ways to learn what to do next for fintechs and of course for the banks. And you've just heard about amazing thing. We've been wondering which way the wind is going, but I think it's a very valid point, and I completely echo after hearing Ram sir. But Shafiq, we spoke about B2B payments for UPI, which has already been reeled out. How do you see this global landscape for the B2B payments? I think we had some interesting chat. We want to throw some light on that.
See, I mean, like if you talk about B2B payments, like cross-border payments, or you're talking about
maybe in this context we can look at cross-border payments because you've been one of the master for that.
Right, so there was a big hype, like so when UPI announced that they're going global, and UAE and other countries were part of that, so there was a lot of hype around that, and a lot of questions came up saying that what will happen about the cross-border payments now? So there was so exchange houses were a bit worried, saying, okay, fine, if the person can do a UPI transaction, now will that go straight away? Okay, but I think we are a bit far away from that because right now I think the transactions are only from your NRI or NRO accounts within the country, which is fine, but it's not really an international transfer that happens on the UPI as what I've seen in some of the news, right? So that's not true. It's only, it's enabling, which is good because last time I was in Pune and I was doing some small value transaction and the guy just told me, GPay karo. GPay nahi hai mere paas. Like, I wasn't able to operate my own account, but now at least we have that flexibility of being part of that digital payment system, so which is good. Now, if you look at UPI, let's take an example of UnionPay, for example. That was a Chinese product which was within China. When the people started moving out of China, UnionPay became one of the schemes which was globally accepted, not there yet on the e-commerce side, but still there. Right? And that's how I see the UPI also moving towards the journey wherein as an Indian, I have an account, now I can operate my account from anywhere, which is definitely a value add. Now, whether you call it a UPI or you term in any other form, but that's the benefit that we have, because you're avoiding that transaction hassles that we used to go through. So that's a huge plus, I would say, in terms of how the UPI would really help an NRI to operate the account. So that's from the accounting perspective or from the transaction perspective, I would say. But yes, the way I see the whole transformation that's happening in the Indian banking system, it adds a lot of value. Of course, in UAE we are doing NPSs now. Okay, we are like later by a couple of years, all right. But it's a lot of learning that's there. And for other part of the market, like especially in GCC market, there are a lot of things which are happening now, which India has done a couple of years ago, right? So a lot of synergies that I've seen. A UPI has been talking to just a couple of banks in UAE to enable the payments, right? There has been good traction as well. So probably maybe not this year, but next year we would see a real value on a UPI, from those cross-border payment perspective.
No, wonderful. I think that gives really amazing perspective. Now let's come to the action, right? While a lot of us are talking about these product lines, use cases, and all, but how do we really get there, right? So there are two ecosystem players which we could identify as a group, and first we want to talk about the regulatory bodies, and second, of course, the ecosystem enablers like FACE, for example. So maybe we can talk about how I think, in my personal opinion, whatever I've seen from a biased lens of a banker and now as a startup founder, is that Indian regulator, they've been very sharply focusing on this segment. They've set up a fintech department and all. But I think we all industry experts, look from our own lenses. We have a biased view. Ram sir, probably your view is can be a neutral one, and you can guide us how exactly this is crucial. Probably we can cover that for the global regulators like probably MAS or Middle East, and then we can talk about the ecosystem enablers. For example, this event or the FACE or some of the organization bodies. So we can talk about these two aspects, which will really help to take this forward, as the step for redefining the BAS.
Okay, it's a very interesting topic. Reserve Bank of India is a central bank. They are responsible for financial and monetary stability of the country. They're responsible for each and every person in the country, every citizen. If he loses 10 paisa, it can go to parliament and say, I've lost 10 paisa because of RBI. Having said so, it's very progressive regulator, and they started also adopting a new thing which is coming in the market. Reserve Bank has already created a department for fintech in their basis the recommendation by a committee constituted under the leadership of Mr. Nandan Nilekani. They are also thinking of regulating fintech, but waiting for few acts to be passed out by the parliament. Last 2 years, the parliament is not functioning to the extent they were supposed to function. I don't know the reason, but then the act is still pending there. The second thing is that supervision. RBI is a regulator. Now, supervision is becoming more and more tougher and tech-based. In that scenario, they are facing difficulty, particularly supervising offline. Online, they can have the softwares, they can do that. And then offline supervision, they are giving it to the self-regulatory authority like FACE, which we are applying. In microfinance, there are already an SRO, they are MFIN. In the same logic, each and every industry, they want to put up a classroom monitor kind of people who remaining in the part of the same classroom, but try to monitor these people that they should not behave like an errand boy. Eventually, the punishment will be given by the class teacher, which is the RBI. So this is a concept which is going to happen. And this is really going to take the entire digital lending in a very larger consequences. Today, a 500 rupee loan, it is becoming economically viable. And RBI says, go ahead with that. But while recovering this 500 rupee loan, you should not do certain things which you are not supposed to do. Using their social media, using other things and harass them. So that's happening in India. RBI is really keen that everybody has to be regulated so that they can grow. And they can grow in a positive way.
No, wonderful. I think the role of SRO was very well explained. Uh, and I'll never forget this classroom example and class teacher, class monitor. I used to always be class monitor and I really so yeah, I mean, amazing. So, Shafiq.
Good you spoke about classroom, right? But yes, I mean, I think every regulator today, in almost all the countries that I've seen, are very progressive. They are trying to govern. They have realized that, yes, that's the way forward. They are looking at CBDC, that's for their own, but then they're also looking at what the fintechs can do, huge potential. So that's happening everywhere, right? I mean, in UAE, central bank have a fintech office within the central bank itself, and they have few new licenses introduced as well, just to kind of support those fintechs, right? So that's happening over there. What's important is education, right? And when you speak about education, what do we do? Like, fintechs, they want to educate the banks, and that's what I've seen most of the times, right? Guys, you don't know what's happening outside, let me educate you, right? I think that has to change a bit, right? Bankers know what they do, and they have been doing that for ages, right? What's important now is banks, like the culture has to change a bit. In terms of, yes, as a bank, you're doing great, and you'll continue doing that one, but there's a change that's happening. Now, it's about time, banks take the initiative of educating the fintechs, right, in terms of what exactly happens, because most of the young guys, there are a few fintechs which are started by some senior bankers, that's fine. But there are some startup guys, who understand the pain points, and they're trying to solve the problem, which is good. But at the same time, do you really understand the impact of the way you solve it, right? And that's very important. So the education, because otherwise you sit back in a forum and then you hear the fintechs. Most of the fintech forums that I'm part of, I just get to hear that, right? Oh, the banks don't understand the business. The regulators are not supportive. As a guy, that's not true. Regulators are supportive, and they have a bigger responsibility that they want to do. Bankers are supportive as long as you can meet the requirement. Now, the education has to come up because I have not seen that kind of education. You spoke about forums. There are many forums. But then, how many forums are there where there's a collaboration of fintech and banks and other financial institutions together? Right, very few. You'll have fintech forums, you've got banking forums, you've got a central bank, higher skill. You see, that's what's happening. And they're in silos. And this is what's happening. And as long as you operate in silos, either you'll find them as a competition or you don't understand the business. As simple as that, right? And that's very important. A lot of associations are there, all right? Fintech association, I'm part of a few of them, all right? Banking association, and in UAE we have an exchange house association, I was part of that as well, all right? And we talk about our own businesses, okay? And then we start saying how the banks are taking more transactions from cross-border payments compared to the exchange houses, how fintechs can do or cannot do, right? Just to that, back in November, what I did, I created one platform because I was part of the exchange house, I was part of the bank, and part of fintech. I said, guys, let me do one thing, bring everyone together. And it was successful, and it was supported by MasterCard and SWIFT and all. And the reason for that success was because there was a forum talking about regulation, and on that panel, we had all the three people, fintech, bank, and exchange house, talking about their challenges and how they can cooperate, right? And that's the reason it was very successful, and a few more platforms have been built around that one. So again, education is very important, but then we have to change the way we educate, right? Though we speak about school education has to change. Similarly, our model has to change, right? And that collaboration is very important. Banks, if somebody says, I get to hear this thing, like fintech come up and say, like, the banks cannot last longer. Come on, guys. This has been going on decades. They'll continue doing what they're doing, right? Okay, it's just the way you're doing it, right? And what's important for the bank is, if you don't transform the way you do it, somebody else is going to do it anyway, right? I was part of the Bank Chain Committee, initiated by SBI. So I used to fly from Dubai to India, and we used to have these 30 banks together discussing things on blockchain. We discussed a few months, and then I said, thank you very much. Things are not progressing to the way I expected. So, but again, that's what's important is the banks really need to kind of change the way they see things, right?
All right, I think that brings up, honestly, as both of gentlemen said, that it's really impossible to converge and talk about this topic for half an hour, but I think we've got something excited coming. But it was amazing for you, both of you, to come down for the event, and of course, on a Valentine Day, of course, flying down from Dubai, and Amsar, of course, been very kind. So let me thank you on behalf of the audience. And yeah, we'll of course have an offline chat, and we can quickly take one question if anybody has anything. Yeah.
Majority of the population using will be in rural and semi-urban areas. While on one side you have regulations, on the regulations, don't you feel that they have to be quicker and a stable regulation? I mean, recently we had a regulation where they said that fintechs will have to operate on the background of NBFC platform. The whole model underwent a change. So, I mean, certain knee-jerk regulations like this are going to affect the whole ecosystem. That is number one. Number two, enabling environment. The enabling environment also includes client level or user level literacy. You know, I mean, we had a fiasco around 6 months back where there were sizable fintechs misusing their authority. I mean, the regulations are for the regulated, not those who violate laws. You know, so you're going to have enough of them. I mean, you'll be surprised to hear recently, even they use the name of Reserve Bank of India, you know, to fine certain regulated entity and take away the fine outside India. So that's another, I mean, how are the control systems that are going to be implemented, I mean, how they are going to do it. So don't you think that first we'll have to create a total enabling environment which actually is inclusive of the remotest areas in India, and then go big for implementing fintech or innovating?
Two questions you asked. One is that you want RBI regulator to tell you that what is going to happen, right?
Not RBI alone, everyone. Like, I mean, I'll give you another example. Like, I mean, I'm a NBFC MFI. Suddenly, our risk team found out that someone in Jalandhar was using our name, our address, and giving loans. And the platform was available on Google Play. So the Google Play also will have to be very regulated, or they'll have to have a risk management system that they will not upload any platform, app which is actually trying to hoodwink people, you know. So these are the kind of thing. It is not only RBI who is regulating. Everyone will have to be.
I will reply to you. I got your question. So what is happening today? NBFCs in India, they are surrogating their NBFCs to various app lenders. I'm not saying you. Too many people, and they are charging interest up to 100%. Not only the 100% interest, they are charging the processing fee, which is another 10%. And even you don't take loan, don't apply for the loan has been given to you, they started recovering. So in this scenario, RBI and other central banks, they have started creating a regulated entity between the industry itself. If you are a lender, you are supposed to join, I mean, it is advisable to join one of the association and they will advise you. You remember last week what happened? A knee-jerk reaction taken by the government of India, and they had asked about 190 application, or their website was withdrawn. I had my 10, 11 members, they had the same problem. We went to MHA, we talked to them, we went to MIT, explained to them and said, sir, ye galti ho gayi hai aapse. They realized and they have withdrawn. So what I say that when you go in a group along with the data and ask them for certain things, they will do it. If individually you go there, they will not listen to you because you are not a regulated entity. Believe me, regulators are interested in regulating the things, but it has to be in a both way. 100% interest.
That's wrong.
A 5,000 rupee loan, they pay 12,000 rupees in a year. Is it correct?
No, I mean, the same entity which had actually used our name to give loan, we were nowhere connected. They were giving loan for 3 months at 100% rate of interest.
Sir, somewhere you might have signed an agreement. They must be having, otherwise you complain to the
there's no agreement between us. We don't even know the organization. They've set it up, they've used my address, they have not even used my the software on my website.
I think let me conclude and help you. So I think that's what we spoke about, creating the SROs and helping each other. So I think we can always take help. I think this globally is going to happen, I'm sure. And then there are regulators, there are organizations we should take help of. And very valid question, and we appreciate. And probably we can also have offline discussion.
Just one thing, like, I mean, the last thing that you mentioned, right? I mean, from somebody using your brand name and all, right? And that's totally relies on you because, you know, there are risk monitoring tools available, right? Where you monitor and you take the proactive action, like, you know.
And it was not only us. It was not only us. There were at least 10 to 12 MFIs, microfinance, NBFC, regulated microfinance, NBFC, where the names were taken and they were doing it all over India.
Yeah, so no, that's one thing, because this is happening not in India, globally, right? There are risk monitoring tools, as I said, like, they are available which monitors your brand, your CEOs, your brands and all. Anything that you see out in digital space, you get notified and you can bring them down, right? So if you don't have that element, then yes, this is going to happen. So the moment you go digital, by the way, and there's a lot of aspects are there, and this is what the governance really plays a role, that, we need to do the risk management part. So
no,
yeah.
The governance part, what I was trying to say, I think my communication was not right. The governance part on our part was quick. No damage was done. But it took 7 days time for Google Play Store to remove it. It took 10 days time for the government to react. And whole of India, we started receiving calls that we have taken a loan from them. Now they are using our pictures for blackmailing us. They are using coercion tools for getting the money back. So my point was that the regulators also have to be quick. Google Play Store has to be quick. The whole environment has to be quick. Where
no, absolutely, and point taken. And I think yes, look forward to more such discussions. During the interaction, what all we have. We have Ramsas and Shafiq sir for some time. He's got. So once again, thanks both of you, and I would like to also thank the organization. So I think we can just proceed for the next setup. Thanks everyone for being wonderful audience. Thank you.